So actually, let's do one thing. We try to repatch that line with Jay. In the meanwhile, we have another guest joining us. Srinivas Ravuri is the CIO of PGIM India Mutual Fund is joining us now. Srinivas, good afternoon. Thanks a lot for joining us. What have you made of this stunning sort of move in the market? Globally, things are looking quite iffy, but in India, clearly, the impulse is to buy each and every dip.
Yeah, thanks for having me here, Anuj. It's a surprise move. In fact, as we get into the 1Q results, we were very skeptical and worried what will be the likely earnings for the corporate India. But as you know by now, that the overall results have been surprising on positive side. There's a big concern on what will happen to earnings given the kind of RM prices we've seen in the, let's say, February to April, May timeframe. But corporate India is doing extremely well, Anuj. I think that is what is supporting the move, in addition to the fact that FIs who've been sellers for quite some time have turned positives. I agree with you in terms of globally, things are not looking good. Quite a few challenges are ahead. So we need to be mindful of this rally.
No, so Srinivas, you're a bit cautious right now?
Yes, Prashant, most of the time we are cautious.
That's a good stance on the defense and take a big swing once in a while, right?
You're fully invested, but yeah, within that, I think as we spend enough time in the market, I've spent almost 25 years. So I think being cautious when you're playing a risky asset makes sense.
Hi Srinivas, Nigel on this side. I'm looking at your portfolio. You have Timken in there. You had a couple of other bearing stocks as well. And talking about a big swing, I think your fund went ahead and picked up Rolex rings, just a few days ago. So clearly that is the space where you're quite bullish on. Maybe the indirect way of playing the industrial theme or the auto theme as well. So what's your view on that from here on? Give us a couple of pointers that we could work with. Your stance is clearly bullish on this space at least.
Sure, Nigel, you're right. We've been positive on auto and industrials, these two sectors for some time. Our thought process is we will see a revival in manufacturing spending, capex, whether it is PL or even otherwise, because I think overall industry capacity utilizations are now closer to 75-76%. Though we don't know whether it'll start in 1 quarter or 2 quarters, but direction is, I think, corporate India has to spend on capex, and we are seeing early signs of that. The second is auto. I think both passenger vehicles and the CVs are on a clearly up cycle, and I think that will continue for some time. How do we play these two themes? I think playing through ancillaries is a lot more, I would say, a risk-adjusted way better. You're not trying to bet which brand will do well, but you think the category will do well, and then the associates are likely to be a beneficiary, and that is what is reflected in our portfolio and our recent action as well.
Okay, fair enough. That's clearly a space that you're bullish on. What about some of these defense plays, Srinivas? Do you have any exposure here, because these stocks have also done well?
So we are there, Anuj, but not big time. We are there with the traditional names the electronics manufacturer. But I think as a theme, whether it is the defense, whether it is the PLI, whether it is the infra, I think there is definitely more traction. Anuj, I think that's what we are also trying to play.
Just a little bit more on this domestic sort of manufacturing as a theme. Where is this? There was a lot of excitement in sectors like chemicals, for example, right? Building materials. I mean, you take things like, MDF, laminates. We've seen excitement there. We've heard, not recently, but I'm just mentioning this entire China plus one kind of talk, right? Textiles, for example, there are issues in Bangladesh. Where exactly are you seeing, some momentum building up? And of course, earnings to follow when you talk about manufacturing here. Which areas?
So I think all of the areas that you mentioned, Prashant, textiles, of course, we've seen extreme volatility given the way cotton has moved. Chemicals have done well. There is a bit of breather given the way the raw materials have moved up. And also, I think from a stock market point of view, we've seen valuations, although I would say getting a little bit ahead of fundamentals, and then we're seeing a correction there. China +1 is clearly playing. Prashant, in fact, yesterday there was a management in our office. 60% of their growth is driven by customers shifting from China to India. So I think that trend is very much visible, and that will continue to play out in the coming months and years. In fact, on that, if you see the latest credit growth, Prashant, we've seen 15% growth. I mean, that itself is a heartening number versus the numbers that we used to see in the past. And if you see what has led to this growth, within that, you see actually industry has done much better this time. Retail has been doing well and continues to do well. And within industry also, what is heartening to note is the medium and small enterprises, their growth is almost 35%. So it's not led by one sector or one theme, but I would say I think there is a broad-based recovery in manufacturing and industry across. I think that is why people are getting excited. I'm saying even the FIs are saying that India is relatively safe haven, and all that is contributing to what we are seeing in markets right now.
Srinivas, that was a valid point, right? The banking credit number at around 14.5% odd. I went through the RBI site, and for all the quarters that were mentioned, close to 19-20 quarters, we never saw 14%. So even if you compare it with pre-COVID levels, we didn't see a number like that. And also what was encouraging was the CD ratio, right? I mean, at around 73% odd. Credit offtake is coming up. So that's pretty good news as well. But if the economy is going to be on the mend, then the cement space is going to be in focus. And Srinivas, I'm looking at your portfolio construct. Across portfolios, you'll have some of those smaller cap companies from the cement space, be it a Sagar Cement, then you're talking about Dalmia Bharat, and also some of the larger names in there. So how much of a role does this consolidation theme have to take place? Once you have a new player coming in there, the street is a buzz that something could take place. How much of a role will that play?
I think Nigel, consolidation is there. We all can see what has happened. What is more important is, as a result of consolidation, will we see actually increased pricing pressure or a lower pricing pressure? I think now most of us believe that profitability will actually get better for the sector because the new entrant is among the best in logistics, and cement is all about logistics. So there is no need for being aggressive and trying to cut prices to gain share. And also, most of these entities are operating at a fairly decent utilization levels. You don't need to be aggressive to fill capacities, is the point that I'm making. So as a result of all this, and I think housing as a theme is extremely positive and remains so. I think we are seeing the numbers that we are seeing on the housing finance side, irrespective of this pre-sales, that number we see. So I think this theme is a long way to go. Housing as a percentage of GDP, we are still at about 10-11%. We've seen in other countries this number being closer to 20%. That may be a bit on a higher side, but even where we are, I think there is one sector one can be extremely positive on structural basis. Housing, I'm saying real estate companies may not be, but housing demand is a definite structural story for us, and cement is a play on that.
Srinivas, we leave it there today. Thanks a lot for joining us. Just a word on the market. There's a 3